Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's Plug Power earnings. Plug Power earnings coming up in just 20 minutes' time. Let's get everybody in and let's focus on Plug Power and, of course, all the tariffs causing more pain in the market. What have I been doing? Buying more on the way down. Look at that. Another dip today. Another $1,800. Now, one of the worst stock market performances of any president since a president's become in office. This is pretty disastrous if we look at the week, the month, the 3 months, 7 grand, 8 grand, 6%. It's one of the worst starts, 8%. I mean, this is one of the worst starts of a year of a new presidency in history. This is pretty wild stuff. But you could say it presents opportunity. Well, I believe it does. So I've been buying, and I think the bottom is either in or very, very close. You can't time it. Don't try to time it. It's why I'm laddering in. I've been going all in. And once things go up, we can look forward. That's all we need to do. So we've got a big drop. We've had a big drop. Plug Power is the story of the day. Let's focus on Plug. We've got 20 minutes before Plug begins. So let's focus on that just for the moment. Right, Plug. What a morning it is for Plug. Down again, another 6%, 6.68. I mean, this is a company now obviously in a lot of trouble from a price standpoint, and it's a huge miss. The worst, couldn't be worse. Estimated to lose 23 cents a share. They've lost $1.65. The worst performance for over 2 years of Plug Power. This is a very, very bad morning for Plug. Is it an opportunity? I don't know. That's a huge miss. The whole policy's changed. The environmental structure, renewable energy, all that's been thrown out the bath now. Excuse me, I got an itchy eye this morning, and the stock is down big, and we've got a huge. I mean, look at this. You want to sort of visualize it. You want to visualize the earnings. I mean, that brings it into focus. They've been missing for a while, but wait for it. Look at that. That is what you call a miss. It doesn't get worse than that. Expected 23 minus 165. That's a huge miss. It's going to be very, very difficult today for Andrew Marsh to be able to talk the stock up today. Well, we'll see. We'll cover it live. Things have changed dramatically in this new administration, and I don't know what Plug's future is right now until we get some clarification. Tariffs, everything else, and environmental standpoint. I mean, all that's been cancelled, isn't it? I learned last night that America's pulled out of all military aid now for Ukraine. That's all finished with. So the whole world is changing right in front of our eyes very, very quickly. Anyway, let's go. Good morning, Sensei. Good morning to you. Good morning, Stephen. Hi, all. Oil prices. Stephen's watching his oil. Good morning, Patrick Black, Martyn Sensei. Excuse me. And Stephen, love to see you. What's the 411? I've no idea what that means. Come on, Plug. Hello, Lestin Win. Palu. Hello, all. Justin MC. Yes, opportunity for the future. Well, you know, driving the markets down, burning relationships so we can all buy it back. Well, I could use an example. Was this a good idea? Let me share with you. Let me show you one of the worst performing cryptos of all time, the Trump coin. It popped up on inauguration. The Trump family sold it at the table, and it's now down 75%. So what are we trying to do? Drive the markets to zero that everyone with money can buy back? Well, who has money to keep buying the dip forever? I certainly don't. I'm fully invested, never sell shares. I'm fully supporting of the economy. I'm fully supportive of business. I'm owning. I'm never selling. I'm buying dips. But you run out of money, even if you use margin. I mean, I can't buy anymore. I cannot buy anything else. I just can't buy. Well, all you can do is stay in the game. But look at that. I mean, I would imagine that's one of the worst performing coins of all time, right? I mean, it's down 75.6, nearly 76% now after a pop on inauguration night. Look at that. I mean, that's the reality of all of this. Scary, scary stuff. So is it an opportunity? Well, I think it is, but you've got to be careful what you buy. Don't just buy rubbish because it's worth nothing. I think the only way forward at the moment is the S&P. I'm very happy to be buying it. But run out of money. Can't buy any more dips. I mean, that's the thing. That's where Sensei's charts come in, because you're trying to identify the bottom, and Sensei gave a great breakdown the other day of all the channels and all the opportunities to buy. Let me just come back to plug for a moment. But if you are relying on the chart, of course, then you are also paying taking the risk that everybody else is doing the same thing, and we're all going to buy at the same moment, which is the purpose of a chart, right? So you start laddering in on the way to those points, which is what I've been doing. So there you go. Anyway, plug power, 15 minutes ago. I doubt if there'll be slides. This is the presentation. They're just playing audio, so it's just going to be an audio presentation. So stand by for that. I'm just seeing if I've got another buy order at the moment. I don't know if it's just gone through. The S&P, has it just gone through? I think it has. You're ordered to buy, yes, 5 shares at 533. Yeah, another 5 shares at 533. There you go. I've got 21, 28, 20, 21, 16 days to go before I get paid. Just over 2 weeks to get paid. Once I get paid again, I can add some more, but that's it for me now. We're on the button. I'm all in, 100%. Couldn't be more in. Couldn't be more committed to buying the market than we are right now. So looking for a bounce, please. Looking for people to stop selling, please. Would be nice. Anyway, plug's coming up in just 14 minutes from now. Stand by. We should probably go red, shouldn't we? Really? Yeah. The studio is very, very red this morning. Good morning, everyone. Let's see who's here. The Peckman. Justin MC says, yes, it's an opportunity. I am laddering as well. Just bought a few shares of the S&P 500 and QQQ this morning. And just there. Hi, Patrick, Lestin, Polo, Sensei, Justin. Hello, everyone. Mike's here. Great to see Mike. How are you, Mike? Stressful this morning, right? Market's still falling. Got a little bounce again, but just wait for the next drop again. It just keeps on going. Thank you, Mike, for all the hellos this morning. Ardij. Is that Ardij? Hope I pronounced that correctly. Welcome to you. Patrick Black. Vinny, good morning. Good afternoon. Question. Martyn, did you get a box at the front door yesterday? I might have done. I'm trying to wait for everybody to come in. But yeah, I think I understand the jokes of yesterday. I am waiting for the right time to mention that, because I'm sure everybody will want to be the first to get my reaction. So let's just leave it like that for the moment. All right. RD, good morning to you. Ardish. I think I pronounced it correctly. I think that's what he's saying. All right, let's keep watching. Good morning from Lakeland, Florida, Kevin Hawthorne. Good morning to you. Good morning. We are going to switch over to members only shortly. If you want to become a member, 98% of our live viewers are members, higher than any other channel on YouTube TV. There is the link for you to become a member. We have many members-only live streams. We have many members-only videos. Our interviews are all done on members only. Our CEO interviews you've never seen if you're not a member. I'll engage with you on X and Instagram if you follow me. There you go. Here's our free training. Once you get a 1-month badge, we upgrade you. We got training videos being created now, and plus you can talk to our scalp trading expert and our chart expert, Sensei Ed Nevius. So there you go. Good. Yeah, that's why I always say complain about you. Yes, that's why I said you always complain about your back. Yeah. I'll talk to you. I'll talk to you about the big box shortly. I'll talk to you about the big box shortly, but I thought it was probably best to wait for the right moment. Let's focus on plug right now. We are just 10 minutes away. Still seeing plug fall. The overall markets, I've just bought another 5 shares of the S&P. I'm all in, 100%. We are in extreme fear. The RSI now is oversold for the S&P. Many of the stocks are oversold. We've got Tesla now, 100% tariff being put on Tesla from Canada. They're not having all this bullying and tariffs gone insane. So we've got 100% tariff. You can't buy a Tesla now in Canada. It's going to double the price. So 100% tariffs on Tesla in Canada. I wonder what that's done to Tesla stock this morning. I wouldn't imagine it's doing too well. No, look at that. Tesla absolutely plummeting. Elon Musk stock going down the toilet. I don't know how this is a good idea for anyone. People are being margin called left, right, and center. People are losing their money left, right, and center. Businesses are going to go bust. People can't sell stuff. People can't trade. It's a full-on trade war. Look at that. Tesla's 30% down this year so far. Look at that. Look, all the gains are gone. If you bought at the top here, if you bought on the way up with margin, you're being completely wiped out now. Terrible, terrible, terrible. Tesla can't sell cars now in Canada. They can't sell cars in Germany because of the Europe disconnection. Oh, my God. I mean, when are people going to realize we are a global community and we have to get on with each other? What is this nonsense about just stuff it to everybody? I don't understand what's going on. I've never understood any of this. We're a global community, not living on our own, doing what we want, because we just ain't. It's not, I mean, you don't live on your own. I don't get it. Apple today are being punished. I bet Tim Cook must be feeling sick today. Tim Cook attended the inauguration. He also donated to Trump's fund to get him elected. He also agreed to invest 500 billion, 50 billion, 500 billion to build for new AI plants. Oh, thank you, Connor.
Connor Altair has become a member.
Good morning, Connor Altair. I'll give you all your perks and benefits shortly. To invest in the United States, and then got a 10% tariff slapped on China, and now another 10% tariff. So everything for Apple, their new iPhone's going to go up in price by $1,400. People just can't afford to buy it. I mean, I talk about a slap in the face. This is a very, 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 very bad day. People just see it as opportunity, which I, of course, have to see it that way. I have to see it that way. I mean, if the stocks keep going down and they go oversold and they go into oversold on the RSI and you've got no choice unless you just want to give up on everything and just sit your money under the bed. which is another option. You'll be losing less money right now. Forget the inflation, which I always talk about. But anyway, Connor, welcome to you. Hi all. Plug is the next Nicola. David Callow. Yeah, I mean, it's not good. This was potentially a great opportunity. It's being completely destroyed now. Hi, Vanessa. I don't know what the history books would say, but I would say, I mean, someone could probably check with me. But if we look at the S&P, and remember, I've only got the S&P. This must be one of the worst starts. I mean, someone could probably check, but this could probably be one of the worst starts to any presidency, couldn't it? I mean, the S&P has been absolutely pummeled in the last 3 months. I don't know. Someone could probably find that out if it is the worst. I'm sure it's not up there with the best. Anyway, hi Vanessa, hi Mike, how you doing? Hi Vanessa, hi the Peckman, Vanessa, lovely to have you all here. Jed, good morning to you. Bunga bunga, keep your powder dry. Well, you can't forever, can you? What do? Sit on the sidelines forever and you time the bottom perfectly. See, I don't believe in all that. I was buying a year and I was like, 15 months ago. And then I've been buying the dips when it dips. That's all you can do. We can use charts to guide us, but this is all macro conditions now. This is all external macro conditions. We've got 5 minutes now before the bell goes. Are you ready? 5 minutes now before the bell goes. I beg your pardon, I'm talking rubbish. 5 minutes before plug power. Terribly sorry. 5 minutes before plug power earnings begins. All right. So if you just tuned in, tap the like button. Consider subscribing. So now we've got just 5 minutes. I will welcome our new member. Connor, what you get for your membership. Thank you for becoming a member. You are a bronze member. And what you get for that is if you engage with me on X and Instagram, I will answer all your questions. If you reply below any comment on YouTube, I will reply to all your comments. I reply personally to all of the members. You will now see the members-only videos on the homepage of the channel. There's members-only videos. There's members-only live streams. All my interviews with CEOs, hedge fund managers, everyone to do with anything great like that is always members-only. Members only first, so you get to see that first. There also are members only videos that go out only to the members. There are some that premiere first to the members, so look out for those. Make sure that you've rung the bell so you'll be notified of those members' events. This is what you do. You get extra content now. When you click subscribe, make sure that you've rung the bell like this. Set it to all. You turn on your notifications and you can personalize different channels. If you get too many YouTube notifications, you could decide which channels you want to get all and which ones you want personalized on the YouTube platform. So there you go. There's that. You can also now, for a minimum $5 super chat, order a review, a stock review. You can order earnings. This Plug Power was ordered by one of our members. They gave a $5 super chat. That's why I'm covering Plug earnings today. All right. This was requested by one of our members. You can ask me to do a poll. You get a free song on the music show on Friday night. Here is the music channel. Discount on alpha spread, seeking alpha. Once your badge turns blue 1 month from now, got a 1 and an M, 1 month and it's blue, you can get upgraded on Discord and you get all our free training up to one-on-one with Ed Nevius and Sensei with the charts and everything, Sensei, and on Discord you've got Ed Nevius, plus there'll be training videos exclusively for members. And the membership price will never go up for founder members. No inflation either. It's never gone up with inflation. There's the Discord. There's Discord for you. So you can sign up now. You can pay a couple of bucks and become a premium server member if you want to support the system and get on straight away and get priority. However, if you want to wait for the free plan, It's not as powerful as the paid plan, obviously, but you'd still get access to the channels. You just don't get priority above the paid members. But there you go. There are all the perks and benefits. Right. Welcome, Connor, to the best YouTube TV show in the universe. I love it. Thank you, Zach Zay. Very kind words yesterday, by the way. I was saying to Leah such kind words yesterday on the show. It was quite moving. And yes, I have a big box, and I know what the jokes were all about. And as soon as I get 5 minutes, I will be talking all about it. And so on. I'm waiting for everyone to be in, but I'm just trying to hold my emotions for the moment. Good morning, Lucas Ades. Good morning, Marcus Kloster, Stephen Lewandowski. Good morning, everyone. Okay, we've got 1.5 minutes to go. Expect the call to be 1 or 2 minutes late. That's typical. Let me check the audio. Let me refresh the screen. Make sure all is good. Let me have a look. There we go. No slides today. There's the audio you can hear coming through. I will be muting that in a second, so I will start muting it now. They are showing no slides. It's just going to be... Oh, okay. They have... Maybe there's some slides. Let me mute it and let me share with you what we've got. I don't think there's going to be slides, but this is the plug earnings. We've got 1 minute to go before the call. Robinhood is down 5%, $44 today. No surprise. We had that boom yesterday with the crypto situation, and now we've got everyone selling off because people are getting margin called left, right, and center. Markets are being absolutely pummeled. It's one of the worst starts ever of the year. It's my worst start since I've been doing this, no doubt about it. I've only been doing it 4 years, but definitely the worst start of the year. Right, we're listening in for the plug earnings. Stand by. Expect it within the next couple of minutes. All right, so we're listening in. This is the plug earnings. This is what it looks like. They're not going to show any slides. I doubt very much there are no slides lined up, so it looks like we're going to be just listening to audio from Andrew Marsh and the team. All right, we're on standby now. Let me bring in the audio. I'll bring it to you. They're playing music now. As soon as they bring me the audio, I shall pump it through to you. Tap the like button. It's the Plug Power earnings. Expect quite a doom and gloom call from Andrew Marsh. I can't see it could be anything else today, I'm afraid. All right. Good morning, good morning, good morning. Coca-Cola up again. Yep, I did say, didn't I? Coca-Cola done really well since I sold it and bought the S&P. If I'd left it like I originally said, I would have done a lot better, but that's okay. Yeah. Here we go. We're on standby. Defensive stocks are taking all the money right now. It's not a surprise. But never look back, look forward. Here we go.
Greetings and welcome to the Plug Power fourth quarter 2024 call. At this time, all participants are in a listen-only mode. The question and answer session will follow the formal presentation. If anyone should require operator assistance, please press *0 on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce Teal Hoyos, Vice President, Marketing and Communications. Thank you. You may begin.
Thank you. Welcome to the 2024 fourth quarter and year-end earnings call. This call will include forward-looking statements. These forward-looking statements contain projections of our future results of operations or a financial position or other forward-looking information. We intend these forward-looking statements to be covered by the safe harbor provisions for forward-looking statements contained in Section 27A of the Securities Act of 1933 and Section 21E of the Securities Exchange Act of 1934. We believe that it is important to communicate our future expectations to investors. However, investors are cautioned not to unduly rely on forward-looking statements, and such statements should not be read or understood as a guarantee of future performance or results. Such statements are subject to risks and uncertainties that could cause actual results or performance to differ materially from those discussed as a result of various factors, including but not limited to risks and uncertainties discussed under Item 1A Risk Factors in our annual report on Form 10-K for the fiscal year ending December 31st, 2024, as well as other reports we file from time to time with the SEC. These forward-looking statements speak only as of the day in which the statements are made, and we do not undertake or intend to update any forward-looking statements after this call or as a result of new information. At this point, I would like to turn the call over to Plug Power CEO, Andy Marsh.
Good morning, and thank you for joining our fourth quarter conference call. Last night, we announced significant structural change to streamline our cost base through Project Quantum Leap. Over the coming months, we'll be reducing staff, refining our product focus, and consolidating facilities. These measures are targeted to generate annualized cost savings of $150 to $200 million. These decisions are not easy, but they are necessary. The slower than anticipated development of the hydrogen market has been influenced by multiple factors, including the pace of policy implementation, global energy insecurity driven by geopolitical conflicts, the higher cost of project execution, and passed-over enthusiasm in the sector. However, we remain confident that hydrogen will play a critical role in the future energy mix, with many experts projecting it will eventually contribute 10 to 20% of the world's energy supplies. The projects that will progress the fastest are those with a clear value proposition, strong policy support, and a well-integrated value chain. As we assess our businesses, our primary focus moving forward will be on three key areas: material handling, electrolyzers, and hydrogen generation to support material handling, as they align best with these attributes. In material handling, we deliver a compelling value proposition by helping customers move goods more efficiently. Plug benefits from three revenue streams in this business: products, services, and hydrogen. In 2024, we have made significant improvements in improving margins for service and hydrogen, expanding them by approximately $120 million compared to 2023, excluding the impact of customer warrant charges. Product margins, however, are tied to sales and factory utilization. Last year, sales were slower as we worked through price renegotiations with major customers and the transition from PPA to direct sales. That process is now complete, and we expect increased deployments this year from both existing and new customers, which will improve our facility utilization and drive positive gross margin. Additionally, hydrogen margins will continue improving with the launch of our new joint venture facility in Louisiana this month, while service is on track to reach profitability by year's end. Hydrogen production costs are a critical driver of both our profitability and the broader market development for fuel cells. By the end of this month, Plug will have 39 tons per day of capacity, while customer demand stands at approximately 55 tons per day. The DOE approval for our limestone plant in Texas, a project creating jobs in a deeply conservative district, was secured in January. We've already have the necessary equipment to cover our equity investment in the project and are finalizing discussions with an external investors to complete the funding structure. Given the change in administration, we now anticipate a later start in 2025, with project completion expected 18 to 24 months from the start date. Importantly, we do not plan to contribute additional Plug equity to complete the project and anticipate retaining a 70 to 80% ownership stake once operational. Our electrolyzer business is essential to both our near-term and long-term growth. The primary applications involve replacing gray hydrogen in sectors like refining, green ammonia, and methanol production. Global demand remains strong, and we expect significant growth in both sales and bookings this year. Notably, we're executing large-scale projects, including the 100-megawatt deployment with Gap. Here's why I see, and this is really important, here's why I see tremendous potential in this market for Plug. Unlike some hydrogen fuel cell market that face challenges across the value chain, such as infrastructure, fueling, and financing hurdles for on-road vehicles, the replacement of gray hydrogen with green hydrogen is a much simpler transition. Customers can blend green hydrogen into existing processes without major operational changes, which accelerates deployments, speeds up time to markets, and you deliver immediate benefits. As we move forward from this restructuring and market adjustments, Plug will prioritize material handling, hydrogen production supporting material handling, and electrolyzer sales, alongside profitable cash-generating assets in well-established markets. If the program is not tied to profitability or cash generation, Plug will not pursue the program in the near or long term. With that, I'd like to turn the call over to Sanjay to review our Q4 results, followed by Paul, who will provide insights into our financial outlook.
Thank you, Andy, and good morning, everyone. 2024 was a year of recalibration for Plug. It included some successes and some challenges. On a positive front, fourth quarter of 2024 marked another quarter of meaningful reduction in cash burn, continued gross margin expansion, and another step change in growth of our electrolyzer business. Cash burn for the quarter was down over 70% year over year, and gross profit improved year over year when you exclude the non-cash charges of customer warrant and inventory adjustment. It is important to highlight that this margin expansion was accomplished despite lower revenue year over year. Now, in terms of challenges, market growth, as Andy touched on it, has been slower than anticipated. Reported revenue for Q4 24 came in at $191 million and full-year revenue of $629 million. We are disappointed with this continuous slippage of revenue, despite significant improvement in sales of the electrolyzer business. We believe it is important to highlight a few key items that negatively impacted revenue in the quarter and for the full year 2024. As we highlighted in our press release issued last night, our application business revenue was impacted by a higher than usual warrant charge of $22.7 million, and we had another $8 million in revenue that got pushed out related to a specific customer program in our material handling business. In our cryogenic tanker and trailer business, we actually made a strategic decision not to ship multiple mobile refueler product to a customer in Class 8 truck space, given their financial position, which negatively impacted revenue by about $16 million in the quarter. In addition, we also had some production delays on few key product line in our cryogenic business that had an impact of about $12 million of revenue in the quarter. Just to reconfirm, this production impact has been already mitigated and will show up as revenue in the first half of 2025. Despite delivering almost six-fold revenue growth in the fourth quarter of 2024 versus fourth quarter of 2023, our electrolyzer business in the fourth quarter was negatively impacted by multiple factors, which represented revenue impact of as much as $68 million. We expect some of this revenue to materialize in Q1 of 2025. Majority of this is related to customer delays, site readiness, with some of the projects actually getting pushed to Q2 and Q3 of this year. And frankly, this revenue fluctuation on a quarterly basis, in our opinion, reflects the early stage of the industry growth as both supplier and customers learn to work together and keep moving projects forward. These factors had a total impact of over $120 million of revenue in Q4 of 2024. Just to reiterate, we believe some of the electrolyzer opportunity will contribute to revenue in Q1 25, and majority of the customer push-out will be revenue opportunities in Q2 and Q3 of this year. Production-related delays in our cryogenic business have already been addressed and will contribute to revenue opportunity in the first half of 2025. We also expect the revenue push-out from Q4 24 in our material handling business to contribute to revenue in Q1 of 2025. Based on all these items that impacted Q4 24, overall seasonality in the first half of our business, and overall macro environment, we believe our Q1 25 revenue will be in the range of $125 to $140 million. You should expect to see continued gross margin improvement. We believe the year of 2025 is set up to be a year of meaningful bookings in our electrolyzer business. As Andy highlighted, given the current macro environment, we remain focused on driving costs down, expanding margin, and reducing our cash burn. With that, let me turn the call over to Paul to discuss the financial outlook in some more detail.
Thank you, Sanjay. Since Andy addressed some of the broader market issues and Sanjay talked about revenues and margins for the quarter, let me jump into a few specific topics. As conveyed in our filings yesterday, Plug recorded non-cash charges in the quarter of approximately $971 million for asset impairments and bad debt and OPEX, and approximately $104 million in COGS for inventory valuation adjustments. These stem from multiple factors, including the decision to temper focus on certain products and markets that are more midterm opportunities, and overall market conditions resulting in slower growth of the industry than anticipated. In terms of the impairments, this relates to property, plant, and equipment, intangible assets, non-marketable equity investments, and assets associated with power purchase agreements and fuel. As a result of these impairments, it will reduce future amortization and depreciation, including a reduction of $55 to $60 million in 2025. In regard to cash burn, we were laser focused on margin and cash flow improvement in 2024, and we saw benefits throughout the year, and in particular in Q4 24. These actions included targeted price increases, labor optimization, rooftop consolidations, improvement in production cost, and leveraging our hydrogen platform with our new green hydrogen plant in Georgia coming online. We expect in 25 to include a full year of benefits from these activities undertaken during 24. In addition, we expect initiatives and Project Quantum Leap to provide meaningful incremental improvement in margins and cash flows, starting in Q2 of 2025 and building throughout the year. These additional measures will be complemented with the strategic efforts such as our new hydrogen Louisiana plant coming online in Q2 of 2025. We continue to be laser focused on driving to positive margins and cash flows in the near term. In terms of liquidity, we ended 2024 with more cash on hand than we anticipated, with over $200 million in unrestricted cash. We recently closed our first ITC transfer sale for the $30 million benefit associated with the liquefier at our Georgia green hydrogen plant, illustrating opportunities to leverage additional ITC assets. We have an effectively unleveraged balance sheet, and we are currently working with existing partners on varied capital solutions. These factors, coupled with the focus on improvement in margins and cash flows, put us in a strong position to achieve our near and midterm financial goals and fund the company with the most prudent, cost-efficient capital solutions. I'll now turn it back over to Andy.
Okay, I guess opening for Q&A, Teal.
Thank you. We will now be conducting a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 to remove yourself from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for your questions. Our first questions come from the line of Colin Rusch with Oppenheimer. Please proceed with your questions.
Thanks so much, guys. Can you talk about, the maturity of the financing for a number of the projects that you're talking about in that pipeline? The project financing oftentimes is a key gatekeeper, but just want to get a sense of cash flow supporting all of those projects at this point.
So why don't you take that, Sanjay?
So Colin, are you referring to some of the opportunities on
the electrolyzer?
Yeah.
Yep, exactly, on the electrolyzers.
Sure. So, again, we are looking at 2 very large projects here in the near term. One is in Europe and one is in North America. And the project in Europe actually is going to final investment decision here by the end of the quarter. And, look, it's a fully funded project, right, backed by a very large financial institution. So financing and the opportunity set of this project should not be a challenge. And next project in North America is actually related to big methanol opportunity. Again, there is already an offtake for that methanol opportunity. So in light of that, Colin, the biggest thing in this space, right, is before you get to FID, you got to secure that offtake, really get the financing structure looking a lot like solar and wind from an offtake standpoint. Both of the projects that we're looking at here in the first half of the year have that attribute. So we're really not concerned from an overall financing standpoint. We just want to make sure that we land the project. We've already done the basic engineering design package in these cases and looking forward to, moving ahead with the customer.
Thanks so much. And then, on the material handling side, obviously there was, a lull in some of the spending in warehouse automation and, some of the capacity getting digested in the warehouse space. Can you talk a little bit about what you're seeing from early indications? We saw some green shoots late in 24 on folks starting to spend again, but any material change in some of the spending patterns that you guys are seeing with some of those customers?
I think I'll give you one indicator, Colin. Is that one of my largest customers put down money to be able to qualify under the old 48 to support $200 million worth of business. I think that's, a strong statement about their anticipated growth and expansion. We have both, what we see, and we announced, as you may remember, in the fourth quarter, expansion with BMW in Germany, just to name a few of the larger customers. I can tell you that this announcement last night helps us with our customers. I checked in with some of our sales folks who I asked to reach out after market close to let them know what we were planning to do. What I heard was, we're happy you're going to take the steps to reach profitability. We're glad you're focusing on our segment, and it makes it easier to do business in the future. So, these are very, very difficult decisions, but in the material handling market, we expect that this will be well received. I mean, if you take a look back, Colin, I mean, I was just sitting here thinking about, Paul mentioned when you start thinking about the income statement level, depreciation was going to reduce $60 million. We're reducing our annualized cost between $150 to $200 million. They're big steps to reaching profitability.
Super helpful, guys. Appreciate it.
Okay.
Thank you. Our next questions come from the line of Craig Irwin with Roth Capital Partners. Please proceed with your questions.
Thank you for taking my questions. So, Andy, I wanted to ask about the DOE, right? Your loan package with the DOE. There's a lot of investor skepticism out there, and nobody's going to know but you guys about what's actually being discussed with DOE and what the changes are. Can you maybe share with us any content of communications with DOE over the last few weeks? Do you expect this team to continue to support the loan package the way it was written? Are there any changes or updates that you might want to share with us around the loan package that would help investors understand the opportunity?
Yep. Craig, there has been discussions with the DOE, and we're pleased at a working level. The individuals we have been dealing with have remained at the DOE. So we're not going through the process of re-educating the team. I think that's a big positive. I know there's lots of noise, but I can tell you when I became CEO of Plug, the first thing I did was step back and try to figure out everything that was going on. We have had regular conversations with the DOE over the past month. I personally will be spending time with them this week. So, from an engagement point of view, and look, we're in very, very red districts. We're in Texas where we're looking to build this. And I can tell you the local political folks in that region are strong supporters of this and are reaching out to make sure that this loan is executed on, the deal that we came to. Look, obviously things which are associated with more social-oriented issues will be downplayed. During the call, I mentioned, during the opening statement, Craig, I mentioned how, our portion of the equity we already have with equipment. We do have, a few funds who want to play side by side with us. I would expect, that construction of this project will most likely happen in the fourth quarter, and that you can say 18 to 24 months before it's completed. And I know you didn't ask this question, but I do want to highlight. We learned a lot from building Georgia, how to build a plant. And I can tell you the Louisiana build was much, much simpler. We actually have learned a lot, and I think the learnings we have, as well as the cost reductions it'll bring to the business, will be really beneficial long term.
Excellent. Then, you touched on this in your response, and it was going to be my second question. So, outside investors for the Texas project, you've already obviously attracted some pretty interesting attention and orders from groups like Fortescue for their Gibson Island project. Can you maybe frame out for us the character of outside investors that are possible there? I know there's some global funds that are pretty active in evaluating this opportunity, that really want the opportunity to invest in hydrogen. But are we looking more at private equity or other institutional investors as probable partners on the Texas project?
We are looking at, and Sanjay and Paul jump in, I would define most of the folks looking at are infrastructure funds looking to invest. And look, they're looking to invest in a new segment where there's growth potential. And, we have a process that's going on. We've identified 2 or 3 folks that we've been talking to. And, I think that, I think you'll be hearing more about it during the coming months. And look, I think your first question, Craig, is important to this discussion. Look, people want clarity, what's going on with the DOE. And, that's part of the process in making sure that we can close these funds, close with these funds in a timely fashion.
Thank you for that, Andy, and congratulations on the strong progress, with your cash use. It's really pretty dramatic, the changes in this last year.
Yeah. Thank you, Craig, and we're going to continue to drive more to make sure we have a strong financial position.
Thank you. Our next questions come from the line of Samia Jain with UBS. Please proceed with your questions.
Hey guys, good morning. So how are you looking at data center backup power generation, and how do you see Plug benefiting from that in 2025?
To be direct, I don't see it as a benefit in 2025. Our view is that when it comes to hydrogen, one of the biggest challenges is to make sure that you can support long duration outages, and that requires a great deal of hydrogen storage on site. We think that business opportunity is a 28, 29 opportunity. Really, to be successful, we really think you need hydrogen pipelines that you can store hydrogen in, and there are some data centers in Europe that could make sense in the future, but I would not expect revenue from that segment of any size over the next 2 to 3 years.
Got it. Thank you.
Thank you. Our next questions come from the line of Bill Peterson with JP Morgan. Please proceed with your questions.
Yeah, hi, good morning, Paul and Andy and team. Want to maybe take the applications question more broader than just the high power stationary. So I think at the symposium a few months ago, I guess you thought that the materials handling should probably go to 20 to 30% year-on-year growth. And now you're kind of expecting 10 to 20%. More broadly, I guess, over the next few years, what is going to drive the applications business? Is it going to be materials handling at this stage, given your comments around stationary power, not, or at least the high power backup, and maybe not viable in the next few years? And then mobility appears to be fairly challenged as well. So what's going to drive the applications business, and what's the right way to think about the growth over the next few years?
Bill, this is a real important question. I kind of touched on in my remarks, but the material handling business, you have a plug established, what I'll call a micro infrastructure that can support the customer's needs, and so the value chain is clear. And you look at markets like on-road mobility and stationary, there's so many other items in the value chain that have to be implemented and be successful for those businesses to grow fast over the coming 2 to 3 years. So, material handling is one that we can look at and say the pieces are in place. It's also, and you may have heard in my comments, when I talk about the electrolyzer market, it's not going to be folks who are going to dominate, who are looking to drive mobility. It is going to be people who are able to put the end product, whether hydrogen or green ammonia or methanol or SAF, directly into the value chain without too much complication. I mean, I sat through about 3-4 months, I sat through a McKinsey presentation in D.C., and I sat back and listened to it and said to myself, they had a matrix of how one should think about markets, though they weren't talking about hydrogen so specifically, they were talking about the whole renewable world. And it really was kind of a clarifier to me that you need to develop focus on value chain. And look, our business will grow as we improve. If you're a customer, what's your biggest concern when it comes to plug? You have a business that improves the productivity of your operation. You have a company that, we have fixed the hydrogen issues and risks our customers may have. The biggest risk is, how will plug perform financially? And the steps we've taken today will actually help us accelerate growth in the market. And I can tell you, I do know of some of our large customers, they're looking to accelerate their growth. If our numbers are lower today, Bill, look, we don't want to overpromise. We want to make sure we deliver, and so we want to set clear expectations. But I think we see a healthy market, and it's why we're laser focused on material handling and why we're going to be laser focused on electrolyzers.
Thank you. Our next questions come from the line of Eric Stein with Craig-Hallum. Please proceed with your.
Good morning, everyone.
Morning, Eric.
Hey, so I can appreciate it. Sounds like not guiding to fiscal 25, and I know, Sanjay, you gave Q1, but maybe just some commentary on the year. I mean, should we expect this to be your typical mix, first half versus second half? How do you expect the year to play out sequentially? Any details to fill that in would be helpful.
That's right, Eric. Look, I mean, as I kind of touched on it, So Q1, you have seasonality, right? Then we are looking at sort of the macro environment that's got a lot of puts and takes, if you would. And there is a benefit, however, though, of some push-outs from Q4 into Q1. So when you look at this $125 to $140 million in sales, typically Q1 has been 10 to 15%, but given some of the push-out, you can probably imagine it's more like 15% plus in terms of the revenue mix, 15 to 20%. So in light of that, that's, I think, how you should think about the full year for the company at this point in time. And one another thing, we just want to make sure that Andy touched on it. What we have the strongest visibility on is Q1. We're already obviously sitting here in the month of March. We will do the same thing when we report our Q1 earnings to give you the visibility on Q2. We're really focused on obviously driving that top line, getting the growth for the company in 25. But the bigger focus you can appreciate, hopefully, is on reducing cash burn, expanding margin, and really getting to that EBITDA break-even territory as soon as we can as a company.
Yeah, no, I totally get that, but those details are helpful. And then maybe a good segue just on the cost reductions in your plan here in 2025. I mean, you gave pretty good detail there. I'm just curious, how deep you see those. Is there more room to go if necessary? And how do you kind of balance that between, as you said, I mean, you've got, even though now you're going to be more focused, material handling, electrolyzers, hydrogen, still have a big growth opportunity. So how do you kind of balance your near-term objectives while still being able to execute on those longer-term growth plans?
So, Craig, I do believe that the learnings you receive from deploying projects actually have large benefits to other markets. Nothing makes us better at deploying electrolyzers than the fact that we learned how to build plants ourselves. Nothing helps us better for markets that will evolve in applications like stationary than getting our quality of our present fuel cell products better every day. So I think that some folk, I'm a power engineer by training, and I think a lot like a power engineer about how things scale. But when you think about fuel cells, you're really thinking about probably 2-3 different power levels of fuel cells, but learnings at one level translates to the next. So we're, we are making and focusing on activities that will make our financials stronger, which in the long run will really allow us to go into these other markets as they become available. So I guess that's, being successful now will help us a great deal in being successful in the future. And that's the decisions we're making.
Got it. And maybe I'll just sneak in one more. Just for the 150 to 200 million in targeted savings, can you just give kind of the high-level mix between cost of goods and OPEX?
I would say, I'll take it quick and Paul correct me if you disagree. I would probably say that it's almost 50-50 between COGS and OPEX.
That's a good proxy.
Yeah. Look, we haven't made, we're obviously going through the process, and I have to be, respectful for our employees and others before I kind of say exact numbers.
Okay, thank you.
Thank you. Our next questions come from the line of George Gianarikas with Canaccord Genuity. Please proceed with your questions.
Hi, good morning, and thank you for taking my questions.
Good morning, George.
Good morning. I'd like to ask Andy about your view on the policy environment in Washington. It's clearly quite confusing, and I'm just curious as to whether you can share any details on conversations you've had or your view as to how the next 6 or 12 months will look. Thank you.
So, it's obviously an evolving environment, and I'm going to be spending some time in D.C. later this week. When I look at the history of fuel cells and hydrogen, the supporters of it, the last time we had a real major fuel cell only bill to support the industry actually happened under President Trump and a pure Republican Congress. I can tell you last week there was a bill introduced by Representative Tenney, who she's in a very, very red district supporting fuel cells, and it was her second bill that she introduced in this Congress. I think that, look, I've been pretty clear about the fact that we felt that the previous administration implementation of the IRA, especially when it came to hydrogen tax credits, was rather disappointing. And we kind of view the new administration as more business oriented, and hydrogen is actually supported strongly by the oil and gas industry, which is beneficial. I suspect there'll be ups and downs, but look, I think this is real important. There is a global market for green ammonia, green methanol. There's needs for hydrogen here in the United States for applications like ours. That's not going away. And this administration is looking for the U.S. to be, energy dominant. And to be energy dominant, you have to meet where the world sees demand and where the world sees new demand. And it is in SAF. It is in green ammonia. It is in green methanol. And that's not going to change. So I think it's really important for the U.S. To make sure that China doesn't dominate these industries long term. And I think many, many people in the House, in the Senate, as well as the DOE understand. Bergman, I think everybody knows, was one of the biggest proponents of the hydrogen hubs. I think I know this is a long answer, but I think it just needs to settle down.
Maybe as a follow-up, I'd love your thoughts also on what's happening in Europe, too. Thank you.
There's, if I look at Europe, it's one of the reasons I think Sanjay is so positive about the electrolyzer market. So much of what we're working on, for example, is in the hydrogen hubs, Hydrogen Valley in Spain, where there's strong support for build-outs and deployments. I think that where you're going to see, I think you're going to see Germany continue to support hydrogen deployments. Obviously, the geopolitical tensions at the moment, makes things a little tense. But look, even long term, we have a analyst who helps us in Europe, who was an ambassador to the EU, told us there could be a huge opportunity for projects and deployments like we do in Ukraine once all this is calmed down. So, I think Europe is, there's certainly lots of nuances with Europe, but you can look at Spain and can see what's going on and say, hey, this is really good for Plug Power. I think you can say the same about Australia, and I think these are markets that are going to be the heart of our electrolyzer business. And look, you've heard our announcements in Portugal, for example, with Galp, what we're doing there, with what we're doing with Iberdrola in Spain. These are projects that are going in the ground now to support the economy, and all of them are supported by the governments at some level.
Thank you.
Thank you. As a reminder, if you would like to ask a question, please press star one on your telephone keypad. Our next questions come from the line of Sharif El-Maghrabi with BTIG. Please proceed with your questions.
Hey, good morning. Thanks for taking my question.
Good morning.
Good morning, Andy.
Yeah.
The Georgia ITC transfer is pretty interesting. Are there other piecemeal opportunities to pull cash out of existing equipment, either Georgia or elsewhere? And is there a reason you recognize the ITC on that particular liquefier rather than the entire plant?
Yeah. Andy wants me to answer that one, so this is Paul. The short answer on the first part is yes. We have, as an example, when we turn on our plant in Louisiana, there'll be a ITC credit there associated with the liquefier as well that we can take and we'll share with our joint venture partner there. That could be similar size to what we recognized in Georgia. And then we have some additional assets that we've deployed last year for PPA opportunities that there's ITC benefits on that is probably in the 15 to 20 million range that we're actually working pretty closely right now to closing in the near term on both of those opportunities. So that's meaningful and helpful in terms of the cash. And then on the answer on Georgia is that there's a decision to make on the balance of plant as to whether you take PTC or ITC. We've decided to take the PTC benefits. We've recognized those in our results last year, and we're going to continue to do that. Any plant that we put in place, we go through a cash benefit analysis as to is it better to take the ITC or to do the PTC, and it's there's many factors that fall into that, but that's the choice that we have. So that's where we stand on that, for the Georgia plant.
Thanks, Paul. I realized that was a two-parter, so thanks for taking my questions.
You're welcome.
Thank you. Our next questions come from the line of Chris Sung with Wolfe Research. Please proceed with your questions.
Hey, good morning, Andy, Sanjay, and Paul.
Morning,
looking at your hey, Andy. Looking at your K, wanted to check, are there new conditions that you need to satisfy in order to receive the DOE loan?
I'm not sure. There's not new conditions. The loan was finalized in early January. The only thing that we have to do is, and it's approved. The way it works is the loan itself has been paper documented, approved. Everything's there. To apply the first project, which is Texas, there's some specific things that we have to put in place. In terms of like direct agreements between the DOE and the EPC contractors. An example is just one microcosm example. So those are things that we're working on. We're really close, and they're not necessarily additional conditions that make it any obstacles. It's just really, unfortunately, the parties that work on these things that we're working with have done many other deals with the DOE, so they're used to working with the DOE on these kind of ancillary agreements. And so it's more just, I would say, for lack of better words, the bureaucracy of just crossing the T's and dotting the I's and putting all those residual components in place to officially kick off Texas as a project underneath that structure.
Great. Thanks, Paul. And just for my follow-up, on that loan, how much are you requesting as part of the first drawdown? And sorry if I missed this earlier, did you say you're expecting proceeds in Q4, or is that when construction is expected to restart?
So we would, I would think that Q4 is my best estimate when construction would start. Paul, maybe you can go through the process of how you pull down cash.
Yeah, so the way it'll work is when we get the project approved and kick off, the effort there, which is really getting the EPC guy going again, the EPC contractor going, which, as Andy said, tentatively would be, we're thinking would be probably in the fourth quarter. In the first month, what happens is you compile all of the anticipated invoices each month that you expect to pay as a part of that project, and you submit that to the DOE, and then they advance money against that. So that's, we're going to get credit for our equipment that we've contributed to the project, and then they will front money to pay the majority of the bills that we have to pay to construct that project as we move forward. So that's how practically it works.
Appreciate it. Thank you, guys. I'll turn it over.
Thanks, Chris.
Thank you. Our next questions come from the line of Tim Moore with Clear Street. Please proceed with your questions.
Thanks for taking my questions.
Good morning.
Good morning. An important watch point by investors is, the positive gross margin inflection point that investors have been, eagerly waiting on. You made some really good progress announcing the cost savings plan. I think your prior guidance at the symposium was, the expectation back then was to maybe be slightly positive gross margin exit rate for the year. I'm just wondering, now with the significant cost savings plans being rapidly implemented, do you think that exit rate still holds, or do you think you could pull it off in the third quarter for maybe positive third quarter gross margin?
Tim, our goal is always hopefully trying to do things sooner rather than later. But look, given everything and all puts and takes, I think it holds in terms of Q4 of 2025 as a good target that we are looking to turn gross margin positive.
Great, Sanjay. That's helpful. And the other question I had is on a different topic. Maybe can you speak to maybe the liquid hydrogen appetite and the sentiment? The H2 hubs network rollout's a little bit behind schedule. Just, can you give any color or stories on, progress there with some customers and, green shoots for, takeaway from your production facilities?
Look, I think the hubs will develop. I never thought the hubs would develop that fast. If you looked at the funding for the hubs, it was years of study and implementation, and that was even under the previous administration. We never, and I think if you even go back to previous conference calls, we never expected significant near-term or even mid-term revenue from the hubs. I think hubs implementation would help the hydrogen industry later in this decade, and that's always been our view. And, they're just, I would say this, they never really had a very fast schedule, and I don't see them being meaningful to us over the next 2 to 3 years. But if implemented, not only is it a sales opportunity, but really helps to build out the larger hydrogen economy. So we're supportive, but probably are not stunned that they have not, accelerated as fast as people may have thought. But also, quite honestly, they're accelerating at a pace that the government actually laid out there. So that's kind of our thought process there.
Great, Andy. Thanks for that. And that's it for my questions.
All right.
Thank you. Our next questions come from the line of Samantha Ho with HSBC. Please proceed with your questions.
Hey, guys.
Morning, Samantha.
Bring it back to, hey, Andy. You mentioned a few times about the Texas plant being in a very red district that's very pro-hydrogen. And the one thing that's really striking me is just how much support the state of Texas has for hydrogen. Like, enthusiasm overall actually is quite palpable. Has there been any conversation in terms of Texas funding in any sort of stimulus or what type of initiatives that they can provide to get the industry, the hydrogen industry, really more competitive, or just accelerating all the developments there if the federal government does kind of pull back on their support?
I have not, I will be meeting with people from the Texas delegation this week. I have not seen anything, and we do have people in Houston. I have not seen anything to date. Where the Texas delegation can help us the most, and the Texas government, is to help move things through the DOE quicker, as I think you see both representatives and senators willing to help in that area.
Okay. I guess the other thing that I'm kind of curious about is with like potential monetization of the PTC. I realize that there's still a lot of questions as to what's going to happen with like a potential tax plan ultimately. But what sort of conversations are happening behind the scene? In terms of opportunities to potentially monetize those once we have greater clarity. And then I guess what are your thoughts in terms of how quickly that could, like, what kind of milestones should we be looking at? Like, how quickly can anything on that side occur?
You want to take that, Paul?
Yeah. So I guess there's two facets. One is practically the way it works is when you file your tax return, it's a direct pay associated with that. So worst case, we file in October, like other corporates that are calendar years, companies, and they pay from that. What we are working with is the tax equity broker that we used to close the ITC sale in Georgia to see if there's parties that want to discount that. It's only a few months, but it can be meaningful to us to discount and sell it off. The good news is we have tax opinions from a reputable big global tax firm and all of the analysis and things that we need to put that package together and make it a very attractive opportunity to sell it off. So, and when we establish that, it makes it easier to do that for this year and start taking advantage of this year, monetizing this year's as well. So it's a work in process, and it's still new. Like any new market opportunity, it takes some time to kind of nurture through it. But we're pretty actually encouraged with the interest level and how we're postured to try and possibly monetize that.
Okay, thank you.
Thank you. Our next questions come from the line of Amit Dayal with H.C. Wainwright. Please proceed with your question.
Thank you. Good morning, everyone.
Good morning, Amit.
Hey, Andy. Just with respect to sort of the macro environment right now and how you're providing guidance, much of the sales pipeline that was built, up until say 2024 is still valid. Can you give us a sense of how that aspect of the execution may have changed a little bit?
You want to take that, Sanjay?
Sure, happy to. Hey, Amit, how are you? A couple of things on this, right? So our electrolyzer business in 2025 largely is executing on the existing backlog. That really hasn't changed, right? We're hopeful that we might even be able to do slightly better than that, but it all really comes down to executing on the backlog. And just to put this in context, I mean, electrolyzer business grew about more than 60% year over year from 23 to 24. We wouldn't be surprised if it's a similar growth rate again in 2025. Now, another piece of our business, which is largely backlog driven as well, is our cryogenic tanker and trailer business. That business slowed down a bit year over year from 22 to 24, largely because of some of the push out, some decisions even we made on the mobile refueler space, even the collection situation and things like that. So that business, I think, again, will grow back up here in 2025 versus 2024 from a revenue standpoint. So short answer to your question, we really don't think there is any risk to that existing backlog. Obviously, we're going to want to book more business here. Well, one very important point to highlight here is we talk about potential for pretty big bookings in the electrolyzer business. Those bookings will really help 26 and beyond, not so much 2025, given the size of the project and when they move and things along those lines. But otherwise, we feel pretty good about the existing backlog. It's all about heads down and execute.
Thank you, Sanjay. My other questions have already been discussed. I'll take my other questions offline. Thank you.
Okay, thanks.
Thank you. Our next questions come from the line of Amit Thakkar with BMO Capital Markets. Please proceed with your questions.
Hi, good morning. Just one quick one for me. Given kind of your kind of path here to positive gross margins at the end of the year and the cost cutting, I was just wondering if you could kind of share with us what your plans are in terms of kind of relying on some of the facilities you have for external equity. How much is kind of baked into the year for that? Thanks.
So I would just say that we have not used any of that since mid-November, any of those facilities. And, there is a backdrop to support the business if required.
You have utilized the convertible facility, right, for I think it was 2 issuances of $22.5 million in, I think the first 2 months of the year. Is that separate from that?
Yeah, that's actually just payback. Instead of selling stock, we actually execute it by providing cash. Do you have anything else to comment, Paul?
Yeah, no, I think just for clarity, so we, the convertible that we did, the preferred convertible we did in November, there's been 2 elements. One is we had some amortization on that, and then because the stock price hit the 290, they did convert. I think it was
2-minute warning for the bell.
But to Andy's point, we have not used either of the ATM facility or the recent SEPA agreement with Yorkville. So, we sit in a good position with ending $200 million in cash, end of the year. And, things like the ITC help bring in liquidity. We also get the restricted cash at $50 million a quarter. That comes in March. So there's a lot of positive things that are helping us navigate this fiscal year.
Thank you.
Thank you. Our next questions come from the line of Kashy Harrison with Piper Sandler. Please proceed with your questions.
Good morning, and thanks for taking the questions.
Good morning.
Good morning. So my first question is on Georgia. You've now had it running for around a year. Just curious where run rate utilization is on the project and how long it took to get there. And the same question for cost of goods sold. I think you guys were thinking about maybe $4-ish per kilo of production costs, but I'm just curious where actual results have landed relative to those expectations.
Do you want to take that one, Paul?
Yeah, I'd say, as you ramp and commission the plant, obviously the cost per kilogram is higher than what you expected. As we've gone through the year and really worked out the bugs and figured out how to run that plant more smoothly, you get the leverage on it, right? And so, I'd say we're kind of in that $5-ish kilogram range,
Before the PTC.
Before the PTC, that's right. And obviously the PTC is super helpful.
Which gets it down to the 250 type range.
Exactly. So that's kind of where we're sitting at the moment, and we expect to take the full, this year will be really good because we'll get the full year benefit of that, whereas last year, you only got a portion of that because of the timing of turning on the plant and the periods of time that we were ramping up that facility.
Got it. And sorry, where is utilization?
Utilization is, we can run at full production. So, it's just based on demand. And so we need to run 15 tons a day. We will run 15 tons a day. I think most days are in the 11 to 12 tons per day range.
Got it. Helpful. And then my follow-up question is just thinking about just forward capacity. I think you talked about 39 tons per day of current capacity, current demand, I believe at 55. You're working on bringing Texas online, which is 45. So, you'll have excess capacity once Texas comes online. Just given all the comments around, the slower market development than you anticipated, just wondering where you're envisioning sending those excess volumes to. Thank you.
Not exactly wanting to provide information about who we're competing against and where we're looking to provide it. All I would say is we have a strong sales funnel and a strong sales team working those opportunities. There's big market already for liquid hydrogen, and We have opportunities with people who already buy liquid hydrogen at scale, who are very, very interested in buying scale out of Texas.
Yeah. And Andy, maybe one more
Yeah,
thing.
go
Right?
ahead.
As some of the players have decided they're exiting the green hydrogen space, as we bring some of these other plants online, and demand for green hydrogen is a long-term in nature, so that I think puts us in a pretty good position as well. Just to reiterate, as Andy said, look, we even have some discussion with existing industrial gas customers to do swap arrangement.
Yep.
It's all about if you have a plant in California, if you have a demand in the East Coast or in the Southeast, right, then that's where you end up doing a lot of swaps. So look, we work very closely together with many of them, and as Andy said, we feel pretty good about demand being there even as we bring our Texas plant online.
Got it. Thank you.
Thank you. Our next questions come from the line of Andrew Percoco with Morgan Stanley. Please proceed with your questions.
Great. Thanks for taking the question. Good morning, guys.
Good morning, Andrew.
Good morning, Andy. Maybe just to start out, coming back to the DOE loan for a second, I think in the press release you guys cited $400 million of coverage from the DOE loan on $600 million of incremental investment. I mean, that implies about, 2/3 coverage on an advance rate. I think you guys had previously talked about 80% advance rates on the DOE loan. So just curious what the delta is there, and if there's been a change in maybe the advance rate assumptions that you're having on that facility.
Go ahead, Paul.
Yeah, there's no change. It's up to 80%, and the dynamics on each project will vary based on the size of the plant and other factors. And we also have some of that is a decent amount of contingency in those assumptions. And so, obviously with the learnings that we've had in Georgia and now Louisiana, we hope that feel like that we're in a pretty good position that we won't use all that. So that's the I guess the dynamic, Andrew, in terms of how it plays.
Okay, that's helpful context. And maybe just sticking with CapEx for a second, you quote $250 million that you've already spent on the project, another $600 million that you need to spend, gets you to about $850 million all in on a 45 ton per day plant. And if I just do that conversion, it implies like $19 to $20 million of CapEx per ton per day of production, which I think is actually a little bit higher than Georgia. So just curious, can you just maybe walk through some of your assumptions there? I guess I would have thought it would be lower than Georgia, just given some of the learnings that you guys have discussed. So any color there would be helpful. Thank you.
I don't know if the math is right, but Georgia will come in around $800 million with contingency, and the contingency is probably 10-15%, and so there's built-in contingency in that Texas number. So overall, I think before the contingency, it'll come in around $700 million.
Okay, thank you.
Okay, thanks, Andrew. And I think that's it for the day, Teal. Well, thank you everyone for joining the call. And look, we're making the tough decisions to make sure this business is successful long term. We're laser focused on material handling and hydrogen to support it, which will really help us grow the market long term. We're laser focused on electrolyzers, and especially those applications which can be deployed rapidly. We're making some tough decisions to cut costs and make sure the company can achieve our EBITDA and gross margin goals. So thank you everyone for joining. I appreciate the time. Bye now.
There we go. Plug Power earnings. Well, that was a very sort of passionate sort of statement there at the end. A very different tone that we normally get on Plug Power. Sounds like they are still all systems go, despite numbers, despite the stock valuation, and the investors seem to have liked it. Seen quite a bounce this morning. Well, Tesla is also in the middle of a bounce right now. It can't sell cars in Europe. Germany just there's virtually a ban. People don't want anything to do with Elon Musk anymore. I think this is terrible. And also we've got Canada now putting tariffs on Tesla 100%. That's expected to follow what Trump has done to them. So We just entered into a backwards and forwards trade war now, all over fentanyl. I cannot believe we are bankrupting businesses. People are getting margin called, losing their pensions. It seems to me the drug dealers that were selling fentanyl seem to be running the world right now. Very, very sad day. All you can do is keep buying the dips, but eventually you run out of money. Everyone's running out of money other than those that are controlling the market and buying the dip, and they can just keep buying it. The likes of you and I, it's very, very difficult, running out of money left, right, and center. But all we can do is stay in, keep buying, but everything that we've worked for the last couple of years is getting wiped out. This is a terrible, terrible start. 3 years now. We've been climbing, and now we're just losing everything at the moment. Is it a buying opportunity? Well, I've got a premiere for you coming up now. I've just put this out, a brand new video, premieres right now. This is it. Stock market crash, XRP. You just can't win. And I'm going to explain why you can't win. And you need to understand this going forward. It's going to get a lot worse. This goes live in 2 minutes. It's a live world premiere. First time ever seen. I'll be with you in the chat. And then I'll be back later for the later opening bell after this with a special opening bell, which is members only. Members only, because members deserve a special members only video. All right. So that's a live stream as well, by the way. So I'm going to give you the link now. It's pinned to the top. It goes live in 60 seconds. Join me for a live premiere. Here is the event in the chat right now. It's pinned to the top, or click on that. It'll take you right there. This is the event, stock market, XRP, crypto, the whole thing. You cannot win, and you need to fully understand this. And I would really appreciate your thoughts and comments, whether you agree with me or not. But that's going live in just a couple of seconds. As soon as the countdown begins, I will end this live stream. So let me just double check everything is right. Yes, that is going live now. Great. Let me double check that will go through to there. Yes, that's right. Okay, so that's spot on. Right, we're all good. We're all set to go. There is the event just on the screen below me there. Stock market crash. You can't win, and you need to see it. All right, I'll be back with you with a members live stream after this video. Watch me live, and I'll be back with a special members only event for the members. Kind of pointless saying that, really. So there you go. Very special members only live stream today. All right. So between now and then, I've got to get busy. There's a little clue to what's about to happen. All right. Okay, everyone's waiting there. It's about to begin. Let me refresh the screen. When the countdown begins, I shall disappear. It's live chat. You can join me in the live chat. And that will automatically go to the live event. Special members event. All right. So we're just waiting any second now. There you go. There's the countdown. So that's it for me. Join me for this world premiere. You can't win. It's impossible. Join me for that. And then that will go into a live stream, members only live stream. And I'll be back. Between now and then, I've got a big box to open. See you back for a special members only. If you're a member, you'll know what this is all about. If not, if you don't know, you don't know, right? If you know, you know. All right. See you back in a minute. Enjoy the premiere. Until next time, take care of yourselves and each other.